Now, everybody's been saying the rates are coming down, they're coming down, and we know the Federal Reserve is going to cut today. So did you realize that rates about a year, maybe 2 years ago, were 8%? 8% were these things. So what are these numbers helping on the affordability if you're looking to buy a house? Maybe how much could you really save if you're looking to refinance? I bet you the numbers are a little shocking to you because they were to me when I ran the numbers this morning. So in today's video, we know the Federal Reserve is going to cut, but at today's rates, how much more affordable is housing today for home buyers, maybe homeowners? That's what we're going to tackle in today's video, folks. So you might learn something, especially if you're a homeowner. You can save a lot of money with these rates, and you maybe never even thought about it. So let's get over and dive into today's numbers. We know the Fed's going to cut. How low are they going to go? Well, even rates at this might save you a lot of money that you didn't expect. So let's get over and look at where the markets are going today, what the Federal Reserve is going to do, and how these rates today are affecting your mortgage payment, or maybe you can afford a little bit more of a home in your market area. So let's dive into it. Here's what we're looking at the markets right now. Mortgage rates, they just dropped to the lowest level in a year, pushing refinances up 111%. The other day, folks, I missed it. I said 81% of people are refinancing. I didn't mean that. I said applications are up 81%. Now they're up over 100%. Have you taken advantage of these rates? If you haven't, I got a tool for you right over through here. On my Rate Watch, or the Rate Update website, I actually created a Rate Watch tool just for you right over there. This Rate Watch 2.0. If you're a homeowner, put in your information in there. I don't sell the data. I'll monitor it for you. So let's say you're at 8% or 7.5% and rates come down. What rate do you want to refinance at? Well, let me know. And then when rates hit that number, I'll reach out to you and we'll go over the numbers and see if it makes sense. But if you're a homeowner right now, here's what you're looking at. And if you're a home buyer, this might push up your home affordability on some of those homes that you just weren't able to find that perfect house because of the house prices. Well, this might give you some relief. So let's look at some of the numbers just for sakes. So if you're refinancing your mortgage, this is how much you could save. A lot of people don't realize it. One of the biggest reasons people don't refinance right now is they're like, okay, the costs are too high, or rates are going to come down even a little bit more. Well, don't look the gift horse in the mouth. Let's look at some of these numbers, and these calculators available to you on my website. You can check those out. I'll show you where those are in a second. But let's take this, for example. Here's a person that bought a house at $400,000, and they financed $400,000. This was about a year and a half ago when rates were 8%. Yes, they were 8% at the end of 2023, at the beginning of 2024. So here's what the numbers would look like. Today, that person would have a 6.125 based on Mortgage News Daily. If you go over to here, there's their savings, $500 a month. Think of that. That is cash. Okay. To earn that, you need to make about $750 a month or $1,000 a month based on your tax rate. And that's how much money you'd save. But let's get over and say, okay, if you're looking to buy, you might be looking to buy. And if you are, we can help you as well. So my name is Dan Frio, folks. I do this report every day to help inform you guys what's going on with these and the whys behind it. If you're out there looking to buy or refinance, I'd love to be able to help you. I've been doing this for over 35 years. I do have a slogan. It's one application, one credit pool. We're going to compare your loan with over 30 different lenders. How do we do that? Well, usually on Wednesdays, I'll come in and I'll do a live event to show you exactly what we do. Today, it's Fed Day. We're going to be live. I'm going to show you what the Federal Reserve does, and they're going to cut rates. But then afterwards, my live event's about 45 minutes after the Federal Reserve actually announces what they're going to do. The reason why is when the Federal Reserve chairman goes out to the media and starts talking, that's when we get all the juicy news, what they talked about behind the scenes and all that stuff. That's when you're truly going to see the markets moving, and that's why we're having a live event at that time. But let's get over if you're buying a house. If you're looking to buy a house, this might be another opportunity to get in, maybe this spring, because here's what you're looking at. At 8% rates, your payment would be $2,900 at 8%. At 6%, you could go up to $485,000. Now, I don't want you to go up to $485,000 because that payment's a little hefty. But this just shows you the buying power. Let's say if you'd only went to $425,000, because house prices, if you watch yesterday's video, I'll try to put it up through here. Case-Shiller, it's a home pricing index. It came out. Home prices are up once again this year. So far, 1.9%. I thought the markets were going to be flat, and here's my thoughts on this. We know Austin, we know areas of Florida. They're getting hit right now, even Arizona. But we have other markets like the one I'm in and the other areas of the country, they're actually doing pretty good. So when you blend it out, I was expecting mortgage or the housing market to be flat as a pancake. Well, we actually have home prices across the nation. It was announced yesterday up 1.9%. Not bad. I'll take it. It beats a loss and beats a crash that many, many, many people were predicting. Okay, so let's get over there. Affordability on that, much easier. So let's go down and say, okay, the house now is up. It went up 1%. So it's $405,000. What would your payment be? $470 less than what it was a year and a half ago. So if you held out, good job. If you haven't held out, again, we have a tool for you to go over to and figure this out. Doesn't refinancing make sense? And use our Rate Watch tool for that. So here's what the bond market's looking like today. If you visit my channel each day, what we look at is a mortgage bond. It's right there here. It's called the MBS. We focus on this because this bond actually controls your mortgage rate, not the 10-year Treasury or anything. It's this thing right through here. All you have to understand is that number up through there. Because when you look at the bond market, most of the bonds give you a yield. This one doesn't. So you have to figure out what the yield is on this price. So what you do is you go, okay, the price of the bond is down. That means mortgage rates are going to go up. There's a yin-yang effect. If the price goes down, rates go up. The bigger the number, well, the bigger the adjustment. So today, I'm pretty sure the markets are going to be flat all the way up until the Federal Reserve's meeting, but I'll be live at the Federal Reserve's meeting and I'll let you know how all this goes. But my expectations are the markets, let's get over to where the markets are right now. I'm expecting these to be fairly flat for the day, and I'll take the Dow Jones at 55 and the NASDAQ up 112 as being flat because each day these things hit record highs. We look at oil also on my channel, and the reason why we do this is we focus in on interest rates and mortgage rates. One of the biggest catalysts of that is inflation. Inflation gets its driver from oil a lot of times. So if oil can stay below $65 a barrel, we're in good shape, and it is right now. We have the 10-year Treasury. It's settled below 3.99. We haven't had that mass flood into the bond market just yet, but we need the catalyst from the Federal Reserve. We need some guidance from them. We need some guidance what's coming on with inflation, and we also need guidance what's coming on the employment numbers. We don't have any of those, so basically the Federal Reserve's flying blind. So we're going to find out today what they're going to do. They're going to cut. How much? Well, let's get over to the Fed Watch tracker to figure that out. So today, in 5 hours, the Federal Reserve's going to cut how much? Let's scroll down and look at the probabilities behind this. There is a 99.9999999% chance they're going to cut. Now, here's the odd thing is, let's start focusing in on this number right through here. This is December's number. So what is it going to do? It was at 93 yesterday, I want to say. The closing bell was an 89 or 90. Now it's at 85. It's dropping. Why? We're going to learn today. Maybe with the Federal Reserve, they come out and tell us what they're going to do. But after the fact, when they really dive into the details, maybe they'll explain to us why the markets are saying maybe there's a little less chance of a Fed rate cut in December. I'm still on the adamant of they're going to cut at this meeting. As the data comes in, I don't think tariffs are going to be really that detrimental to our economy. The jobs report is where it's at. So I think the Fed's going to focus in on jobs right now. Without the data, it's looking pretty weak. So they're going to cut how much? Well, the markets are telling us 25 basis points, and I'm on that bandwagon as well. So if you haven't locked in yet, or you're a homeowner, home buyer, please check out our services right through here. Again, folks, my name is Dan Frio. I do this report each day to inform you guys what's going on with those and the whys behind it. Folks, I've been doing this for over 35 years. I'd love for you to use my knowledge and my expertise. And we also have that slogan that I have each day. It's one application, one credit pool. We're going to compare your loan with over 30 different lenders. How do we do that? Well, check out a video right up through here. Each Wednesday we come out and tell you exactly, or we show you behind the screens how we do it. Today we're going to have the Federal Reserve's live event, so we won't be having it today, but check out one of my last videos on Wednesdays where we actually show you, and we showed clients when they join us, they give us their information, and we right there live, we're going to show you how we put in their data, and it's going to post mortgage rates from over 30 different lenders that we can choose from. So check it out. But today, please join me today at 1:45 Central Time, where we're going to show you the market reactions after the Federal Reserve advises us what they're going to do. And once basically the media frenzy starts, we're going to get all that juicy details and report it to you live to see what in the heck's going on with these and the whys behind it, folks. So thanks for joining me today. Mortgage rates, I'm expecting there to be flat as a pancake up to the point where the Federal Reserve meets and gives us their details. Join us at that time to learn out what happens. See you then, folks. Bye-bye.